What's up, guys? This is Tom, the Action Accountant, and today we're going to do a little bit of education, reviewing a couple stocks around the topic of is a stock expensive? That's kind of a question that comes up all the time. Hey, it's $10. Hey, it's $200. How do we know what is expensive and what isn't? So this week I made some trades around AMD and Square. We're going to take a look at both of those and kind of go through the thought process of what makes a company price the way it is, and then kind of the research that goes back into that to determine, hey, is this a good price or is this a bad price? So if you're ready to hop on in, let's dive for it. First off, let's talk about the trades I made and why I made it. For starters, I sold a put on AMD. I've been watching AMD for a long time, and I really like the company. I like what they've done with their I mean, the graphic cards have been okay. Obviously, they're overshadowed by NVIDIA, but for their price point, they do a really good job. And then their chips have been eating Intel's lunch, left and right. All that said, man, I really do like both of these companies. So let's go ahead and just take a look at AMD and why I picked what I picked, and then we'll actually go into the fundamentals of what I'm looking at and why. All right, AMD down to 85. Cool, whatever. We're looking at that's just today's price. It's just trading there right now. If we look at the 6-month chart, or even the 1-year chart, we're going to see this kind of just big push. It had a really good run up in June because they had an incredible blowout quarter where they would showcase how much they had been taking market share from Intel. If you look at Intel at the same time, which I'm not going to, it's been flat. Intel has not recovered or appreciated it at all in the same way AMD has. Now, back to the question of does that make AMD expensive? It's a good question. AMD's been stuck in what I call a window, a trading window, since July, I guess, since it had that run up. Ran up to 85, had some lows into the mid 70s, and it hasn't looked back. It has yet to breach 100. I think it maybe had an intraday trade where it did hit 100, but after that, it's just been kind of bumping in the high 90s, and then as it would sell off during dips, it would go into low 90s and high 80s, and that's where we're at again right now. So if you look, and if you're actually trying to look at the true technicals behind it, bar chart appropriately says it's a weak buy, because if you look at the last 6 months, it has not been able to get higher highs, and it has in fact been trying to get lower lows. However, if you look at the big chart overall, it's still trending upwards. So it's technically, people like this as a buy. They don't love it as a swing trade, I guess is what it comes down to. Now, interestingly enough, I'm looking to swing trade it, and basically what I'm trying to do is I want to sell puts at these low points and get into that, and sell calls to get rid of it at these higher points. So the way my ideal trade is, I would have been getting in here in this 86, 87. Honestly, if I could have got in at 80, I would have been high-fiving myself, but I didn't, no one saw that coming. But say I get my shares at 87, and I'm able to swing back through and trade it at 93 in a week or two, then I'm looking at a 7% profit on my appreciation, and hopefully a 1 to 2% profit on both sides of my options trade. Now, first things first, my options trade is looking good. I was able to make that 1%, 1.3% to be exact. And if it closed today, I'm going to get those shares at 87 because it's currently trading at, I think we said 85, right? So unless it comes back really hard tomorrow and it closes over 87, I'm going to be winding up buying those 100 shares for $7. Let's do the same thing for Square real quick, just because we're going to just talk about what we're looking at for fundamentals, and we're going to come back and why I'm looking at what I'm looking at, and why I'm happy about the price I'm getting. All right, Square. Last 3 months, higher high, higher low, and then big run-ups. And now we're consolidating back in this 230 range, trying to find new support, which happens to be a higher high than it was. And this is an example. If you're a chart follower, Square ran too hard, and then on a pullback day, it really pulled back. That's not a bad thing if you're a holder. It's a bad thing if you're trading and trying to buy up here. So anyone that listened to my advice and I told them to buy Square when Bitcoin ran up really hard, it's okay. It's coming back. I mean, I really believe Square's coming back. Square's my pick for the year. It consolidated back, and if you're able to accumulate shares while it is consolidating, it's a good look. As it should, or it wants to, going to try to drive back above over its previous price. So I'd be looking at buying in here and holding all the way back up to the 280s, 290s, and then if you want to sell, go for it, but you might miss out on the next leg up. If you look at the 6 month, you get the same story. Huge drawdowns, nice big run-ups. Big medium drawdown, recovery. Big drawdown, huge run-up, drawdown, unknown. 1 year chart, lots of the same. 5 year chart, not really the same. But once the pandemic started, we had a big crash, and then anyone that saw the kind of the future, and I stared at it at 90, and I was like, man, maybe I missed it. I did miss it because I didn't buy it. That thing has been just on a roller coaster, straight up. Now, I read an article today that said Square is hugely overvalued, based on literally everything, and it was a clickbait piece because I don't agree with it, and B, well, let's just break it down. They are looking at pure fundamentals, right? And if you look at pure fundamentals, you never would have bought Amazon, you never would have bought Tesla, and you're going to miss out on Square. And I'll be honest, to shoot straight, I own very little Amazon and I own very little Tesla. And when I have swing traded it, I've been wrong and lost money. So I'm one of the few people, and I never bought Apple either. I'm one of the few people that didn't believe the hype, and I really missed out on that insane appreciation over the last decade. So all that to be said, is Square the next Tesla? Maybe, maybe not. I don't think it's going to be that big, but I do think Square and a few others, including PayPal, including MicroStrategy, and including Tesla now, are following what Mark Cuban called, hey, Bitcoin or cryptocurrencies is doing what the internet did in the 90s, right? Obviously, it was bloodbath. There were people that bankruptcies left and right. It was a wild time to trade and be a company in the 90s. But the companies that adapted and survived really thrived, right? You're talking about Microsoft back then. You're talking about PayPal, was an early adapter of the internet. That was Elon, that started PayPal. You're talking about all these big companies, Amazon, they adapted the internet. So basically, the core concept, of course, thesis is find the companies that are best at adopting to cryptocurrencies, because we're going to start seeing the change in the way things operate globally over the next 10 years, just like we did in the late 90s to mid 2000s. Does that mean every single person's going to be rolling around with crypto in their wallet? Maybe, maybe not. I've got a little bit, but it's less about the person and more about how do companies start to interact and trade with cryptocurrencies and the blockchain. And you're going to start to see these early adapters are going to be set to make money. All that now rambled just a lot. Square's in an interesting position. They're already making money, right? This isn't a situation where Amazon took 20 years to turn profitable. Square is already profitable. Now, I'm going to tell you that it's mice nuts. They're barely making money, but that is so much more exciting than Amazon losing money for 20 years. And Amazon had an incredible 20-year run. Like, no one's going to complain about that either. So this is where, if we look at price earnings growth PEG ratio, Square is doubling their earnings every other year, but their earnings right now are minuscule. They made 34 cents. That's nothing. If you were to extrapolate that out to a year, we're talking about $1, maybe $1.20, and their price over earnings is $240 per share divided by $1.20 per share of earnings. The price over earnings is 200. That is absurd. However, price over earnings is very relevant when you're comparing comparable companies in industries that are well structured and understood. So if we're talking about manufacturing, if we're talking about retail, areas that, it's really easy to understand how JCPenney, Macy's, and Foot Locker work, and how do we compare their earnings. Squares is in a really interesting space because they are doing three things, right? They're in the e-commerce space, and that's where they're actually making decent money, and that's what caused their huge run up initially in 2020. Is you can very easily build a website and transact and help in the e-commerce space. They are now purchasing and owning Bitcoin on their balance sheet. They just completed a purchase of another 150 million. They've converted 5% of their assets over to Bitcoin instead of cash. And then thirdly, through Cash App, they are transacting money around the world, including Bitcoin and including other things. They helped transact over $1 billion this last quarter, and they only made 50 million on that billion, which again nothing. Big scheme of things. I think it said something like, and we're gonna do I think it was 1.3 billion. So I saw it even in the 2% range. Their net profit is nothing, but as global transactions go up and they're keeping that 1% of money on both sides, that's just huge cash flow for them. And then if they get into the treasury business and whatever else, if interest rates recover, then suddenly they have a whole nother business unit that's making money on interest. It's crazy. So I blew away why price over earnings isn't as important for Square. A couple other things. Their growth is going to be crazy. It's like I said, it should be doubling every year. So while that's not terribly exciting, or not every year, every other year, they're going to go from $1 to 2 and 2 to 4 over the next 2 years. No one, you shouldn't be too excited about that. However, it does show continued improvement. Now Amazon went meteoric when they finally started to make money. Right, they made $1 the first year, then $1.50, and then $2.50, and then now they're making $5 a quarter, and that took like 3 years to get to. So it's hard to say, oh, they're going to double their money every other year, when in fact, their growth rate could increase exponentially as more and more crypto adoption happens, and people start integrating with Square more. There is a ton of growth opportunity. I really like Square. That's fine. Let's go back to AMD. AMD is more in the realm of easy to compare, but there's always more factors at stake, right? So if we look back at price over earnings, AMD is profitable. They made $1 per share the previous 12 months. Their last earnings was 52 cents. So I suspect that that's a little bit more realistic. We'd have to go dig at each of their earnings to see, but their earnings should be continuing to increase. I'm going to go ahead and pull that up while we're here. I think $2 per share is going to be in the realm of possibility as they go forward. We're going to look at quarterly, and I'm just going to look straight up at earnings per share. Diluted earnings: 14 cents, 13 cents, 32 cents, $1.45. Now that's going to be from a particular quarter, probably holiday. Yeah. So they had a real huge uptick in sales ending on 12/26. So they ended right after the holiday, and then they're going to slow back down back towards this Q1, Q2, Q3 numbers. However, it should do a little bit better than Q1 because there was some shutdown stuff and shortages. So I'd expect these. I wouldn't expect a repeat of this quarter for Q1, but I would expect growth between 1 and 2. So let's say they hit two. I assume that's billion in sales. Yeah, it's 2 billion in sales. That's nice, substantial growth. So let's just say 20 over 1.7 over 17. 17% growth. That'd be great. And then suddenly you're talking about earnings, diluted earnings that are continuing to increase over this. So I don't think it's unfair to say $2 is pretty good going forward. And so I'm going to use, instead of the trailing 12 months of $1, I'm going to use 2. So their price right now is 85 divided by 2. It's still 40. It's still really high. Square was 100. It was 200. If this bumps up to even 250, it's still getting down to the 30 range. If we look at Intel, I'm just going to pull it up at the same time. Intel is their most obvious comp, right? They're in the same exact business. Different market share, but if you're buying a processor, you're either buying an Intel or an AMD. Intel struggled over the year. Intel's a great company, so don't let anyone confuse you on that. They pay a dividend. They're really they're blue chip at this point, but you're not going to get 2 and 3x growth unless you really buy the dips hard. 40 to 60 is great in a couple months. But if you look at their earnings, if we trust this and say they made $11, which we saw with AMD, that wasn't quite accurate. Their PE is in the 11 range, right? I mean that's a third at best of AMD. So the argument is if you use price over earnings, Intel is significantly cheaper and a way better buy, even though as a share price it's $60 instead of $90. I guess that would make sense. But we're not saying that the shares are 1/3 of the price. We're saying that the company itself is worth 1/3 of that. Now, the way to come up with what a company's valuation is you take the number of shares outstanding. This is where I need a little info across the video. Number of shares outstanding times the price per share. We'll find that within most financial statements. So if we look at AMD, they have 1.2 billion shares outstanding. And their current price is $85. Their valuation is not 102 billion, but it might be. Let's take a peek at that valuation. Enterprise value is another one that they use. 102 billion or 104 billion is market cap. I like enterprise value a little bit better because it incorporates debt. So it's interesting to me that enterprise value is a little bit under, but I did it right. I'm just as surprised as you are. And if you look at Intel, their enterprise value is 270 billion. They have more shares, significantly more shares outstanding, because their price is $62 a share. So all that to be said, if you think AMD has the potential to become as big as Intel, and you look at it from an enterprise value point of view, there's a lot of room to run to get up to that same spot. Now, Intel is in fact has more market segments, is a bigger company, but those are just a couple ways to look at, is a company expensive or not, or cheap? And it's really the stock price. It's very hard to get around this, but the stock price has nothing to do with is the stock cheap or not. And I personally would much prefer to be owning AMD going forward over Intel. However, if you're a value investor, there's really strong arguments to keep and hold Intel for now.